Hello everybody, welcome back to the channel. Today I'm doing my top 3 option plays this week. And for those of you new to the channel, what I like to do is I like to sell premium and let it expire worthless and just collect all that premium and get that 1 to 2% return a month. Usually while being untested. I don't like to stress over my positions, so I try to get under support levels and stuff like that so I don't have to think about the positions after I put them on. So first off, we have Zoom. Zoom, I actually already have a 230 contract on that expires next week, not this week. And I think it's time to start putting another one on to let Theta start doing this thing. So since earnings, it gapped down to like 290 and then had a slow bleed down to 250. Looks like it may have found support here, but I would say that's a weak support at best. The trend is actually looking down a little bit here, but we're below all the moving averages here, so I'd expect a little pop up anyway. Earnings is not till 11:30, and you see what this blue icon is. So we got time to actually put on a play here and let Theta do its thing and not worry about any earnings shenanigans. RSI, we're below the 50% here, so that means it's slightly oversold. That's another indicator that might go up. Basically, what I'll be looking at is I want to definitely be below this 250 mark because that's a weak support. We see volume tends to trade up here, so hopefully that'll gravitate the stock price back up. But basically, I'm going to be below 250 at the minimum when I'm selling a cash cure put on this guy. And when you put on this put at like a 230 level, it should only cost about 2,500 in margin. Let's go ahead and take a look at the options chain. What I decided to look at was the November 26th weekly here. And I'll be looking at the 230 level here again. So I already have a 230 in play that's going to expire in the next couple weeks here. And I want to get the next one on so we can start cooking anyway. And the delta for this position is 12. That means there's an 88% chance of it finishing out of the money. So 88% of the time, I'm collecting about $220 here for doing nothing. So that's why I kind of like this play. If you want to get a little bit more conservative, you can sell the 225 and make it a 10 delta play. If you don't like the idea of doing a cash cure put, you could do a put spread, sell the 230, buy the 225. You should get about 60 cents credit for doing that. So that's $60 per 440 wrist. Not the best spread in the world. Like you try to collect 1/3 of the width of the strike, but that could be a decent play if you want to look into doing that one if you're bullish on Zoom. Next up, we have Kroger. It's been a while since I've actually played on them. I didn't like the movement all the way up to 47 here. But you can see we're trending down a little bit. We're getting back to more realistic price levels. Got some nice volume here at like the 37 area where the stock should slow down if it continues to dip. No earnings until 12/2, so don't have to worry about that for a little bit. RSI indicator saying that we're severely oversold, so it could be a time for it to sell a put because you think the stock will go up. And basically what I want to be at for this one is under at least the 37 mark. So let's go ahead and take a look at the option chain. And then what I was looking at was actually the November 26th put again. So I was looking at the 36 put. And if you look, the fill might be actually 36, so that's a 1% return on cash risk here. So that's pretty cool. Delta is 0.2, so that's a little aggressive. Also, anything up to 0.3. You could do the 35, but you might only get filled at 28 cents. $28 per 3,500 wrist. Not huge risk reward there. So these are the prices I'd be looking at, with the 36 or the 35. And just sell those and let those cook. I think I might do 2 contracts at the 36. Although if I was going to go do the 35, I would do 3 contracts and try to get a fill around 28 cents. Next up, we got CCL. As you can see, this is a stock that's been slowly trending upwards here. We don't have any earnings until December, so nothing to worry about there. A lot of volume and price action above the 21 level, the 22 level. So pretty nice indicators here. As I'm looking at this, I see like a long time support going back to like the 20 level here. And even recently, it looks like we're developing some minor supports in the short term as we kind of continue to make higher supports moving forward. Now, what I'll be looking at is trying to get around the $20 or $21 mark, and I'll be looking for like 30 to 45 days out. If I go to the Analyze tab, and we'll take a look at the, again, November 26th, and you can see even the 20 level here, you can get a fill around 25 cents, maybe 24 cents. 24 divided by 20 is more than 1, so it's more than a 1% return for a 40-day hold. Delta is 12% here, or sorry, is 12.12. And then the other one I'll be looking at would be the 21 mark, because you get like a 2% return. I mean, 40 divided by 20 here is, basically 2%, so this would be like, what, 1.7%? So I'm looking at selling 2 CCL 21 puts to get that 2%, or that almost 2% mark. And the idea with CCL is I'm not afraid to actually hold the stock, so I'll take assignment if CCL dips below 21. So that'll be what I'll be looking at, is selling the 21 put. And that wraps up this video. I hope you guys have a good week next week.
If you're liking this content, go ahead and click like, subscribe, and turn on notifications so you can stay up to date on any videos I put out.